Hello again, traders, and welcome out. This is Sonkit from Currencies, and this is a market outlook for December the 19th. It's a Monday. Let's talk about markets. Let's see how things develop so far and have a bit of a follow-up on what we discuss in our currency room. So make sure you watch the currency room first, because this will give you a whole lot of context of what we're looking into this week. So let's do a quick market analysis and see how the markets perform today. And again, markets are not looking good here. And we talk about this in the currency room where that the price action is confirmed that it actually wants to go lower. So it really comes down to the timing and the intensity, how quickly it will go down. But it's pretty clear that the markets is giving up these levels here. Look at this 50 to 20 moving average, and now here we are 50 to moving average. So we are breaking below those two lines here, and at this point it looks like the range that the market's gonna aim for is down here, which was the October lows. So right now there's not a whole lot in support. The next support really comes in around this level here, but right now it's a very slow moving price action, but it's moving consistently to the downside. Remember, we were before this whole CPI, before the last week, we were at a cusp of either a big breakout. And you can see that we got a bit of a fake breakout here, and then everything's kind of turning downside here. So we don't really have any sort of chances for a market rally here. Again, the end of the year rally that people were looking for. It's not like it's going to happen this year. So I've seen this market kind of play out. We'll take a look at some historical charts, but we've seen this before where the markets will just slowly bleed into the next couple of weeks. So that's the market that we are in currently. Now we can see the same thing in the world markets too, and we can see the same thing. We are below we're testing the 50 moving average, but it's following the same trajectory. Now, taking a look at the crypto markets, what are you seeing? Exact same thing. So really, it's a pain across the board. That's kind of a theme here. If you look at the percentage change today, S&P was down 0.85%. BT is down 1.34%, crypto is down, and gold is down. So the only thing that was up today was oil, but everything else is down. And I think this probably be the theme for the next couple of weeks. As we really like this price action in the equities, I must say the price action in currencies is really lagging. By lagging, meaning that we should be seeing a lot more bigger percentage moves, but we are not really getting any sort of movement like that. So maybe it's going to be a delayed price action, or maybe they will just stay disconnected for a little bit. So it's something we'll need to highlight here as we start to talk about realistic expectations when we talk about the currency market. So overall, you can see that the price action has now dipped below the 52 moving average. So we have a -2 as the market outlook. I think this is, again, we'll talk about volatility right now as well. But volatility is lower, but at the same time, the market's moving lower. So we could be in this environment where it's a lower volatility, but we are also moving lower at the same time. Now, let's talk about some of the key events that we need to pay attention to this week. So last week was a very busy week. This week was on a much lighter end. We have the Bank of Japan press conference and statement tonight. Again, nobody's expecting for Bank of Japan to make any changes here. So I think this probably be a snoozer. Not really expecting to see any sort of changes from the Bank of Japan at this time. Now, if you take a look at the notable event, I mean, we could see some decent move off this CPI numbers from Canada. So this is the one that I'll be paying attention to. And on Friday, we have the Canadian GDP. So these are the two events that we have for Canadian dollar. So I'll be looking at some Canadian dollar crosses in this class today. But that's the only place where we can find some news catalysts. But outside of that, it's pretty much the same old risk of aversion theme across the board. But intensity is definitely on the lower side. So let's take a look at market analysis, currency analysis, and see how things are moving percentage-wise. So this was the outlook on Friday. When we look at the markets on Friday and we looked at the velocity, I mean, we had the cryptos were doing terrible. We had some of the things is in the -2, Swiss franc, pound, and Aussie. The yen and the Kiwi was in the +2, and the euro was a +1. So if we really go and take a look at how things move today, let's take a look at percentage change, because we didn't see a continuation from Friday. We're definitely seeing a bit of a turnaround in some of those price action. Now, if you take a look at cryptocurrency, you can see that it's a pain across the board. There's no better way to paint it. This is not a risk-on environment. The money's not flowing into assets. It's actually the opposite. The money's flowing out. So in that case, All of these things will, instead of inflating, they will be deflating. And that's really where the money's kind of coming out of. Now, within the currency market, again, based on how bearish or the market has been in the past few days, I must say that the price action has not been that amazing within the currency market. I mean, look at a day like today. We had the British pound that was down slightly. We had the euro that was up slightly. And then we have the Canadian dollar, which, again, it's good to see that it's caught a bit of a breathing room here. But then we have the outperformer Kiwi, which actually took a bit of a hit here. But then if you take a look at dollar, I mean, dollar was almost flat. I mean, this is where we should have seen the dollar go flying higher. But we're not really seeing that right now. So something we'll talk about it when we look at charts, because we are seeing a lot different environment than what we've seen like before, like back in August, when the market kind of did this very similar thing that rolled over from the 200-day moving average. I mean, if I see the currency market, they're not responding the same way. So something we need to be kind of looking out for. But right now, not really seeing that kind of price action. So something we just need to pay attention to in the next 24 to 48 hours. And always make sure that you're trading the markets in front of you. We don't want to trade the markets that you want it to be. Things can disconnect. We can see some lagging price action. That's common. But again, these are the times where you don't want to be over trading, but you want to be looking at the possible case scenarios and just kind of trade that whenever it happens. Now, velocity scores, again, this is an updated outlook, and notice that we actually have the Kiwi, which turned a bit weaker. We had the Aussie, which was actually already weak, but then Kiwi actually went from a +2 to a -1. Pound was already weak, and again, the yen has actually kind of gone from a +1 to a -1 as well. The dollar is right in the middle. I think the dollar could be on the cusp of breaking out, but so far, no confirmation yet. So I think that's something that we would want to see based on what the market price action is, but something that we haven't really seen it materialize yet. But if it does, that we will kind of jump on it when it happens. Now, the Canadian dollar is actually staying, it's actually improved a little bit as far as the scoring goes. We'll take a look at the chart and see if the CAD is ready to get out of the slump. The last month and a half has been terrible for CAD, and it's been in one of those most oversold readings that we've had. So we'll see if this is getting a little bit better for the CAD. Euro, again, holding it steady with the +1, and surprisingly, now again, let's talk about what the theme is. Swiss franc is the one that's catching a bid because of the risk-off theme. Traditionally, it's the dollar and it's the yen. You can see that the dollar is not catching the bid. The yen is not catching the bid. So where's the money going? In the Swiss franc. So pay attention to that. Pay attention to dollar Swiss franc. Pay attention to Swiss franc yen, and then see which currency is at play. And clearly today, what currency at play was the Swiss franc. So if you have paired against the Kiwi Swiss franc, Aussie Swiss franc, even Swiss franc yen would have moved decently here. But again, this is where we trade the markets in front of us, not what we want to see. Traditionally, the dollar should have been the one being on the +2, but that was not the case. So we don't want to fight the markets. We want to just trade the markets in front of us. So something we'll pay attention to in the next 24 to 48 hours. So let's take a look at some possible trades and talk about some decent setups here. And as we go into the markets, let's slowly go down the list here. So I want to start with the S&P 500 because the S&P 500 actually looks a lot weaker. And in December, I mean, usually the December could be very much a one-way market. I mean, if you take a look at last year, December was actually pretty strong overall. I mean, so this kind of takes me back to 2018. So 2018 was a year where we actually got a nice little sell-off, and you can see how the sell-off intensified in the second half of this trading month. I mean, the timing-wise is very similar, and I'm not sure if we'll see something like this, but I mean, the market could continue to kind of slide lower. At this time, the volatility was definitely higher. So if you take a look at the VIX to see the volatility, back in 2018, when that price action happened, you can see that the volatility was actually pretty high for the month of December. You can see that the volatility really started to pick up, and that means that the market environment was a lot more volatile. So now, if you're getting this move right now, let's go a little bit more fast forward, and you can see that we don't have the volatility. So this is why I kind of think that this could be a slow bleeding towards into the year end. And if that's the case, you got to keep in mind, this is not the volatile market conditions that you might be wanting to trade. This could be just a slow market condition. So we want to make sure that we are in the right side of the markets here. So I think at this point, I'd rather be risk off versus risk on. As you can see that, like we saw this dollar, again, this is a 4-hour chart. You can see that the dollar has been in this downtrend for this most part, and it's actually making a little bull flag pattern. We got out of this range, and now we're just making a bull flag pattern. So watch out for this previous resistance. If it does break out, I think the dollar can really catch some traction here. Again, everything is kind of lining up as far as the environment goes, but we just need to see the dollar performs in that way. On a daily chart, you can see that it's still in this consolidation phase. If it start to break out higher, then maybe we can play a little bit more directionally. But right now, a day like today, I mean, the markets were pretty weak, but then the dollar actually just kind of went sideways for the entire day. But for the next 24 hours, I think the risk off would be the right place to be. And if you take a look at the yen, on the contrary side, we actually have the yen underperform when the dollar is actually holding in. And if you take a look at dollar yen cross, you can see it has been very volatile. I mean, take a look at the range that we've been dealing with in dollar yen. From the top end, we have 138.42. On the bottom end, we have 134. So that's about a 400 pip range that you're dealing with. I think if it breaks above this 138.50 area, this has more reason or motivation to rally higher. But right now, this is just consolidating. So that's all we can say. This is in a consolidation phase. So make sure you're paying attention to what dollar yen is doing before you're jumping on the dollar cross or the yen cross. Now, let's go take a look at the currencies, because right now, as much as I want the dollar to rally, I think Swiss franc is actually acting as a nice safe haven currency. I mean, we talked about it last week where it rejected that resistance level. I was kind of looking at this as a triple top, but then here we are. We already recovered most of the losses that we had on Friday. So it's really kind of discouraging me to be looking at Swiss franc on the downside. I think Swiss franc overall could break out after this big consolidation here. So technically speaking, all the Swiss franc crosses looks like they want to run. So that, remember, it's not about what we want to see, but it's about what market's telling us where the movement is. And it looks like the Swiss franc is where the movement is. So we'll pay attention to some of the Swiss franc crosses. Now, on the other hand, euro, you can see that euro broke out, and so far it's kind of holding that breakout. So I still like this one to the upside as a +1 for me, but I would rather play this if this breaks out to the upside. But right now, it's the tails, it's not really encouraging. It looks like it wants to fall back into the range. Now, the British pound is slowly kind of moving or losing that little traction here. So I think at this point, if I take a look at euro versus the pound, I mean, pound looks much weaker to me compared to the euro. So something we can pay attention to, especially if we take a look at euro pound cross, you can see that we got a nice little breakout off the consolidation. So at this point, it looks like euro is going to outperform the pound. So lastly, let's take a look at growth currencies. Now, CAD has been the currency that really took a lot of traders by surprise, because it really held in as a very strong currency throughout the year, and then it took a big tumble. So right now you can see how oversold this is, and it's not really a V-shaped recovery. I mean, we are just consolidating here. So eventually, once this consolidation is over, if we can break above this resistance, I can see that the CAD can correct a little bit more to the upside. I mean, this is very extended one way, so that's not a very good sign. So maybe we'll see if there's sort of relief rally in the CAD there. And if that's the case, I think the money will just start to come out of Aussie and the Kiwi. You can see that the Aussie has done very poorly in the past couple of months, so this looks like a nice little short. But I also want you to pay attention to the Kiwi here, because this is where the premium is. Look at the rally that we've seen since October. And I just want to show how consistent this has been with the global markets. So let's just take a look at the S&P 500. So let's just do SPX. Actually, let's try that again. So you can see the SPX. I'm going to overlay that. So you can see that they're actually kind of following its own footsteps here. As you can see, when the market rallied, so did the Kiwi. When the market fell, so did the Kiwi. So this has been more in line with this market. So this is where there's a disconnect. You can see how markets were going lower along with the Kiwi and the equity markets. And this is where the disconnect happens. the Kiwi is holding here where the market has dropped. And this is definitely surprising because throughout the year, this whole correlation has been pretty spot on. I mean, there have been times where it could stay sort of disconnected, but then eventually they will catch up. As you can see, where big moves have happened, the market dropped, the Kiwi dropped as well. So far, seeing a bit of a lag here. So something we want to see, one catches up with the other. I think eventually some of these currencies like the Aussie and Kiwi will give up as well. But right now, I mean, if you take a look at the Aussie here, Aussie looks like it already wants to break lower. So what we want to see is that we want to see it makes new low or break October lows. So the Aussie is already at October lows, but if you take a look at Kiwi, we are way far away from the October lows. And this is where you need to also pay attention to currency cross like Aussie Kiwi. As you can see that the Aussie Kiwi has been very much a one-way trade. I mean, look at the peak at 115 all the way down to 105. The RSI is in this oversold territory. And if you really look in the past here, I mean, there has been some decent rallies in this, in the Aussie Kiwi, which means that the Kiwi might weaken if the Aussie has start to outperform. I mean, there's definitely more premium to be kind of come out of the Kiwi here. So I think the Kiwi is actually I'm really paying attention to, not really getting a confirmation yet, but something that, we're paying attention to closely if we do see that. I mean, look at the CAD here. What I'm looking for CAD is to reclaim this resistance or prior support, which is now the resistance, and then see if you can catch up or rally a little bit here. Remember, again, very oversold levels, just like the Kiwi that's very overbought. We have the CAD that's very oversold. This kind of brings me to some of the pairings like Kiwi CAD. You can see that the Kiwi CAD, I mean, very extreme reading. Again, remember, I'm looking at the weekly chart, not even the daily. So you can see the weekly chart in a very oversold, overbought level. So I think at this point, you can see this thing hasn't really given up this 13-day exponential moving average. So if it gets below this area, which is about 86.50, I think there could be further downside. We could see the unravel of this trade that has really pushed it to the extreme. I mean, you can go back in time, you rarely see this where it went from oversold to overbought in just a month and a half. So I think at this point, if I look at the weekly chart, it looks like it got some nice double, support resistance here, has held it a couple of times before, and it looks like it wants to pull back a little bit further. So I think it's all depending on what pairing you're looking at. I mean, I would have loved to see the dollar do really well, but I mean, right now, dollar is not really as aggressive. So as much as I would like to play the Aussie dollar to the downside, I mean, look at that. I mean, if you just pay attention to the into the price action here, I mean, these are the levels you need to watch for this to break. 68, 66.80, 66.60. I mean, October lows. I mean, if the market tests these lows, you can see that there's a lot of currencies that can actually break lower as well. I mean, look at Kiwi. I mean, from October to where it is. I mean, right now, as you can see on a 4-hour chart, this looks like a reversal pattern to me, where, we have made a higher high with a higher low, and suddenly we made a lower low with a lower high. So at this point, it's just telling me that it wants to roll over. I think the dollar crosses eventually will roll over. It's a matter of, having the right patience for it and, picking the right time frame from it, and not really overextending yourself as far as the timing goes, because it might just take another couple of days before it does that. But right now, it's nice to see when things happen in tandem with everything else, but sometimes we've seen this delay where eventually they follow that direction, but it's just not happening on the day of when everything else is kind of moving. So I think the dollar crosses look decent to me here, but just a matter of where we want to pick it. I think I like Kiwi dollar to the downside. The break below 63.25, stop above at 64, so that's about a 75 pip onto the upside. But I think if it does break lower, it definitely has a lot more room to fall. Same thing goes with Aussie USD. If it breaks this level at 66.50, I think this has a little bit more room to fall. We can also take a look at pound against the dollar. I think pound against the dollar, look at that. It broke lower, made a lower low, and it's just basing here. So if it breaks below this 121.32 area, this has a lot more room to fall too. So I think things looks clear to me. It's just a matter of the timing. we can't say if this will happen in the next 24 hours, but if we just stay on the right side of the markets, I think things will eventually kind of fall in place there as well. And let me just show you the Swiss franc crosses as well, because as much as we take a look at the other crosses, look at that. Aussie Swiss franc already breaking October lows. We have Kiwi Swiss franc. Kiwi Swiss franc. That's already sort of kind of breaking lower here. Look at dollar Swiss franc. You can see that the dollar continued to underperform the Swiss franc. So right now, Swiss franc seems to be doing a lot better as you look at the charts here. So we can also take a look at Aussie CAD here. So I personally think that this, if this risk on sentiment continues, then I think maybe Aussie and Kiwi definitely stand more chance to lose compared to the CAD, which is again very overextended. So I'll be looking at hunting in the Aussie and the Aussie and the Kiwi, and then we can actually pair Aussie Swiss franc. I actually really like Aussie Swiss franc here. It's already breaking lows, and I think it has a lot more a lot more room to fall. Look at the weekly chart here. It's just at the support here. So pay attention to those levels. If the selling intensifies, then we need to kind of turn up the dial a little bit. Right now, the scoring is really sitting at a -1 and +1. So you're slightly bullish and slightly bearish. But when things kind of turn into higher gear, if the selling continues, if the intensity kind of increases, then we need to increase that strategy. But right now, I'm very much a slight bullish and slight bearish, but looking for an acceleration in the market movements. So those are the things we'll be paying attention to. Again, I personally like to only play risk off sentiment here, meaning that looking for markets to continue lower. So if we see any sort of rallies in, let's say, Aussie or the Kiwi, I think those will be great opportunities to short those moves. So that's the game plan here. Again, next couple of weeks could be tricky because we are in this low liquidity period, low volatility period. So we might see some movements happen, but they might just not happen in a quicker fashion. So we just want to make sure use the right time frame from it. Don't trade a too short-term chart. Short-term charts are great when there's volatility, but when volatility is low, we want to be focusing on a higher time frame as things will look a little bit more clear, and your chances to win will be a lot higher as well. So thanks for joining. Have a great rest of the evening, and then let me know if you have any questions, and happy trading. Cheers.